Mark, what might not be stable in the next 36 hours or so is, well, a whole host of assets watching what we get from Kevin Warsh and then preparing for a public holiday in the United States. So give us a sense of what it is you're going to be watching for from Sintra, from Warsh and the other assembled central bankers over the next day or so.
I think the backdrop for July is very positive for stocks if we get through the next 36 hours. So a lot of it is about analysing it through the lens about when will be your opportunity to maybe to enter in more kind of bullish views. I say it in the perspective that we're getting clearly strong growth. We seem to have moved beyond the Iran conflict. Oil prices have retraced a very long way. We're getting still large capital expenditure from the private sector, as well as fiscal injections from state sectors globally. So I think that the overall backdrop is relatively good for stocks into an earnings season that I expect to be generally supportive. Now, in the short term, as you said, we've got Sintra, which is a risk. I think we'll get through that risk, but it is a risk. Now, because of the way rates have moved in the US over the last week or so, it is much more two-way risk, which makes it interesting. And then there's non-farm payrolls tomorrow. Now, if jobs data tomorrow is strong, that'll probably see rates jump up again, and you know, it might disrupt stocks in the short term, especially at the low liquidity. But ultimately, people will go into next week kind of going, hey, the only reason we're going to get higher rates is because the economy is very strong in the US, and that is ultimately a tailwind for stocks. So that'll be the outcome, which is maybe short-term negative, but ultimately positive. On the flip side, if we get, you know, a negative non-farm payrolls number, we might again see a little bit of nervousness that, hey, wait a sec, are we seeing slowing growth? But then very quickly, or maybe over the next week or two, we'll see rates come down a lot lower, because then it'll allow Warsh to be subsequently dovish, no matter what he delivers today, and that will support stocks. So really, it's about a timing. Do stocks rally from the end of this week? Do they rally from the start of next week, or do they start rallying a week from now? But overall, I think the backdrop for July is positive once we get through this tail risk. First up, of course, is Sintra. I'm not expecting something to happen, but we should be very prepared, because people will overinterpret anything Warsh says.
OK, so be on the ready for any overinterpretation of the verbiage from Warsh. As you think about that potential rally then going forward, Mark, is the concentration risk story behind us? Does this become a market that has more breadth?
I think it's no to the first and yes to the second, in terms of I think we will get more breadth in the rally, because I think this is going to be a rally in July on the fact that growth is still holding up, and I think that's going to be supportive for a wider kind of part of the economy. But ultimately, everything is still dominated by the AI theme. We still have an AI capex bubble there. Part of the strength in the economy is the capex bubble from AI. So, ultimately, that is still going to be the dominant factor. And we can't have AI sector, struggle or collapse and the rest of the economy make up for it. So I think the breadth will widen out during the good times. But I think that if AI has a swoon at any point, that will drag the whole market down. So we still have that massive concentration risk, even as breadth will widen out over the next month.